Thank you. Hi, everybody. I suppose this is the clicker. Fantastic. My topic is slightly different to what you see on the program, and I've asked permission for that to be changed because I knew I was going to get into trouble after Pravashni spoke about digital inclusion. So it's supposed to be digital inclusion, and then the role of Payshap and Project Future. How does that kind of promote a new world? But in the payments world where I live, you can actually digitally interact and do a digital payment without having access to the internet. Is that possible? Everybody believe that? Yes. So I have to, I think, stretch the topic a little bit broader. I'm going to talk a little bit about financial inclusion, though, and then I'm going to try and link this brand payment system that is called Payshap, which had its roots in the old Project Future, to what we want to achieve. And I'm going to try and explain to you what the banks are busy with. What is the broader strategy behind everything that is going on now with Payshap and such. Let me ask this. Who of you think Payshap is a modern, new, instant payment system based on a new message standard? And that's it. Compared to, how many of you think it's more than that? Which, number one or number two? Which would you vote for? Number two. Okay. So most definitely, you know, Payshap is a very big, broad story, and I think the danger is always to think about it as the plumbing of just a new instant payment system that more or less looks like and does what the old real-time clearing or RTC actually did in the past. Now, if you start to think about Payshap and digital and such, digital stands against what for you? Let me hear. If you think about payments, what stands against digital payments? Cash, absolutely. Absolutely. So we'll have to, I think, also spend a few minutes on the cash story, what's happening in cash and so on. And it's really inextricably woven into the whole story about Payshap and such. So let's then kick off and say, let's just broadly look at the South African payments landscape. And pardon, you know, my focus is very much payments here today. You would see there that volume-wise, card makes up the biggest part of every non-cash type payment. If we think about a cash withdrawal at an ATM also as an interaction where an instrument like a card is available, you could see that in the light blue there at the top, but significantly smaller than normal card payment transactions. So card 52%, with cash withdrawals about 19%, debits about 12%, in all the other electronic transactions, more or less 16%. So by far, card is the biggest by volume payments capability. However, by value, it's a completely different story because the high value picture is woven into what you see here on the screen, and obviously there are trillions of rands that actually run through the settlement process on a monthly up to an annual level. What's interesting here is the red parts, which is debits, and it doesn't look that significant, but debits has been part of the modernization journey. As a matter of fact, it actually led the modernization journey in South Africa for banks twice in the past. And it's probably more a matter of necessity than need. In other words, use cases and such that led to that. But right here in 2006, which I term to be modernization 1.0, we actually were quite innovative in the world at that stage to implement a timing element to when the collection is done directly after the credit. And that was the so-called early window or early debit order systems. And then kind of that moved us around about here in 2013 due to lots of disputes and things that was seen into modernization 2.0, as I term it, which eventually led to the debit or the debit check solution, which has several digital elements to it and requires authentication and all these kinds of things from a user base that are not always that digitally included, if I can use Pravashni's words, you know. So we have to kind of obtain that in different ways, and, you know, we'll talk a little bit about what we see in terms of adoption rates and so on. And it tells us about the journey we actually have with regards to digital. There's hard miles ahead, that's all I can tell you now, but we'll get to that in a moment's time. The fortunate thing is we got the system in place in 2018. In 2021, it basically replaced all the other old systems, we retired them, and DebiCheck is now the system in South Africa's first ISO 20022 system that took us into the future. The credit journey, though, is a very different journey and a unique journey in many aspects. And it took us to the rollout of Payshap. And I think it's important that we all understand a little bit more about that journey, what was behind this journey. And I'm going to tell you the story of that. But I'm going to try and link it then back to financial inclusion. And we have to try and understand how is this to the benefit of financial inclusion and a better South Africa where more people actually have access to financial services and such. Now, to do that, I have to unfortunately also spend a bit of time on financial inclusion, because I think too often we use it as an umbrella term, and we talk about financial inclusion, you know, digital inclusion. We don't understand what is actually meant with that. Do you agree with me? So let's look at that. So first of all, let's understand government's financial inclusion objectives as expressed by National Treasury in their policy document. And basically there's three pillars. You know, the one is that they want to deepen financial inclusion for individuals. So more people need to kind of have access to and need to have the means to kind of interact with financial instruments of all kinds, not just payments and so on. However, on that pillar, they've articulated at least two priorities that are very specific payments related. The one is promote the beneficial use of transactional accounts. So we'll talk a little bit about this phenomena of mailbox accounts, where the transactional account as a store of value is really not utilized well. It's kind of converted to cash, and from there on people interact in cash. So priority one, go and promote the beneficial use of transactional accounts. Priority two, build appropriate payment options to drive usage, so that people actually use better means of or better financial instruments or better financial services than what they currently use. And that touches payments as well, because cash, let's face it, it costs us a lot of money, is an unsafe product and so on, yet it is one of those financial services or products that, whether we like it or not, that is still top of mind and used very much in our context. The second pillar then is improving access to financial services for SMEs, And the last one is leverage a more diversified provider and distribution base. And we'll get to that. But I think important here is to notice another priority, and that is the one of leveraging fintech disruptors to promote and support financial inclusion. So I'll talk to that in a moment again, but it's clear government and the Reserve Bank also want to open up financial services, and they want other players to actually step in and provide services that banks don't. Simple as that. Another view on financial inclusion is the FSCAs. The FSCA have kind of articulated 3 pillars. They say it's all about access. Access means the ease of obtaining a financial product or a service. And it includes things like reach, so if I can't be reached, I don't have access. But also affordability. If I can't afford it, if it's too expensive, I don't have access. And we'll talk a little bit about that in terms of Payshap and its future going forward. Secondly, it's about usage. It's the appropriate uptake, but then the continued uptake of a financial product. And this is, I think, somewhat worrying, is what is the kind of adoption that we see, and how long will that adoption curve actually continue. And lastly, quality, so what is the experience of the consumer? Is it a better experience? And how is that experience also supported by things like literacy and education and so on and so on. So I just thought we had to kind of get a better grasp on financial inclusion before we carry on with Payshap. Everybody with me still? Right. Perhaps one last thing about this that I forgot to show, but important, is that in one of the papers that was delivered by the Ministry of in DTI, kind of alluded to the fact that financial inclusion is also a tool towards transformation, and that was then later explicitly mentioned in a paper that Ismail Mamouniat from National Treasury delivered, where they say financial inclusion is a tool for transformation, which means more diversified power base, broader participation, broader ownership, meaning black companies, fintechs and so on, needs to kind of fill the space where traditional white businesses actually provided these services. And financial inclusion is that kind of gateway into this. So also remember that. We all know about the SARB's Vision 2025, I'm sure you do. There's 9 objectives there. Financial inclusion is one of them. You also see a few others in there, like for instance interoperability, more flexibility of payment systems. Things like opening it up or competition, leveling the playing field and so on. They are all kind of in there. What is important though, is if you start to cross-tabulate those 9 things, those 9 objectives with each other, and you ask yourself the question, which one drives which one? What drives what here? Believe it or not, financial inclusion drives nothing. It is the outcome of many things. So the point I think that we try to make through that is financial inclusion in itself, other than kind of opening up and enabling transformation and so on, you can't achieve that if you don't pull a few other strings or leverage a few other things. Most notably, things like you have to promote more flexible payment systems that can kind of be customized and can be changed in accordance with new needs and new use cases and so on. And if you think about our old EFT systems and so on, they are very siloed, they are very fixed, they're very difficult to change them. So put that in your mind, that something about a more flexible payment system is required to actually get there. And also, we have to retain things like interoperability and such. Now, okay, so what is then the response to financial inclusion from a payments perspective? There's three thoughts that I just want to bring across to all of you. The first is the need for several levers to be pulled. So modernization is not just about ISO 20022. It's just one of many, many things, and there's a next slide that I'll explain that in a little bit more detail. Secondly, worldwide, this kind of simple exercise that we did in that cross-tabulation of the Vision 2025 objectives, that is being confirmed worldwide, that more flexible, adaptable payment systems and interoperability are the two things that is the most important drivers of payments modernization. And then, I think another phenomena that we see is, the third thing there is innovation in payments ecosystems demands transformative change. So it's not just about changing the message format to a ISO 20022 message that can accommodate richer data and so on. Yes, it's that as well, but if you think about countries like India and so on, what is happening there, what they've done and so on, they've used payments and new payment systems similar to Payshap to really transform the whole economy, transform the way people do business, trade, etc. So it is really about transformative change when you think about something like Payshap. There's an interesting statistic. If you compare South Africa's the number of electronic payments to the GDP, we are tiny compared to some of the other developed countries. And even if you look at a year-on-year type view of that, our growth trajectory has been very, very slow. Now, if you then look at some of the other developed countries, Thailand, Brazil, India and such, you see something has happened in the last couple of years. That thing just suddenly started to spike. And that tells you about how doing the right thing, doing the right transformative thing can actually change the economy, can change the GDP number or people that actually uses electronic payments compared to the national GDP of the country. So, modernization does include much more than just ISO 20022. I think the previous slide made the point. But to go into it in a little bit more detail is just to kind of almost look at various objectives in this peacock slide that are being satisfied by either policy changes or otherwise technological changes. It ranges from ISO 20022 to APIs, real-time payment systems, request to pay, proxy capabilities, etc., etc. You can carry on and on and on. There's a whole array of things that you have to harness together to actually modernize a payment system. We did the research in South Africa some time ago to actually ask on that, what do our own stakeholders feel is the most important requirements of a new payment system? And what they indicated, no surprise, in light of what I said about flexibility of payments and so on, is flexibility to support new payments processes, use of international standards, yes, ISO 20022, extensibility to support more and more services, and then also to react to a greater number of end customers and their unique and very changing needs over time. But at the same time to maintain safety and security. Okay, we said we're going to have to go and just look at cash also briefly. So, the cash story. The majority of cash we don't even see. It's on the surface of the economy. There are millions of transactions where a note actually changes hands, and we can probably say, and there's some other information on the right hand of the slide that tells us that at least 44% of a household's expenditure is done in South Africa today, on average, is done in cash. So it's a cash note, cash that is paid. Obviously, in government to government, business to business, and so on, there are much more electronic transactions. But from the perspective of where we work in the electronic payments environments, cash actually is the enemy. And this is what we want to replace, because if we all continue in the cash cycle, we're not going to get to financial inclusion. The sad part, however, is that a lot of businesses also still conduct their business in cash. Cash is highly prevalent. So 63 of formal businesses still pay in cash for various reasons. It's convenient. Customers want to pay with cash, so let me accept the cash. 95% of informal business or smaller businesses, SMMEs, pay in cash, mainly for the reason my customers want to pay cash, but also this dilemma that we are facing. And I call it the acceptance gap. Because the reality is we have between 2 and 5 million micro businesses, survivalist businesses that give people very good little incomes. And if you apply the financial inclusion lens on it, if you loan them money, if you allow those owners to kind of expand their business and so on, they can actually become quite viable little businesses. But we don't, because they remain trapped in cash. Why do they remain trapped in cash? Because they can't acquire any other transaction than a cash transaction. And the stats is basically that there's about 1 billion POS devices, and that's US numbers that we actually got from Visa and MasterCard. More or less, that's the guesstimate. Now that's actually promising, because a year ago, 2 years ago, there was about 800, so there's definitely an exponential growth in POS devices. But it will never, I think, fill the gap. If you think about 2 to 5 million businesses that needs to accept the payment, how do they actually then accept that payment? So that's our dilemma. We spoke about, I briefly referred to the mailbox phenomena. That's another phenomenon in South Africa. We've got fairly deep penetration in terms of bank accounts. 81% people do own bank accounts. But look at that lower income group, and look at the pink bar there, and actually see how many times what is deposited into the account is immediately converted into cash, and from there on, it's a cash transaction or transacting in cash all the time. So if we then have to build a new payment system that allows more financial inclusion, more digital interaction and so on, we've got a challenge, because this thing needs to compete against cash, which, if you look at things like perceived cost, ease to use, real-time experience, interoperable and so on, cash ticks all the boxes. None of the other payment systems, card, any of the others, actually tick the boxes. So the payment system that we need to build needs to compete with cash and needs to tick similar boxes, both from a payer's perspective, which we try to indicate here. Yes, and certain things won't be ticked, it's not going to be anonymous and so on. But understand that cash is a powerful opponent if cash is our enemy in this instance. Also from an acceptor perspective, none of the other payment systems really tick the boxes, So Payshap then is built to eventually get us to a position where more of those boxes are ticked than any other payment system. I think that's important thing. So, Project Future then arose out of all of this, and we basically, two realities dawned on the banks as a collective, and the one is fast payment systems overlaid with mobile payment services are stimulating economies, and they do seem to replace banknotes, they do seem to reduce cash usage, and they enable small businesses and provide a consumer experience. Remember that FSCA pillar on usage, a consumer experience that is experienced as good as cash. And we saw it when we took some of our banks on a study tour to India and those kinds of things, and that's the kind of the conclusion. The second thing is, however, and this is that what many people don't realize, is how do they build those payment systems? And that's a second big realization. It's built on very modern new platform technologies that allows a completely different way of adding to, expanding, and so on. So Payshap had to kind of tick both or deal with both of these realities. And through that, I think the emerging features of Payshap started to come up to us. You know, it needed to be built on that kind of architecture. It had to be enhanced. It had to enhance access through APIs. It had to have very sophisticated fraud detection and prevention capabilities, as we now implement with farms on Payshap. It had to support rich data, which FATF16 and so on is basically now requiring from us, you know. And unfortunately, we're not ticking that box yet completely in Payshap, but nevertheless, together with that, things like accessibility, ease of use, instant speed, and all of those things. We don't need to go into all of that. The important part, though, is that it is built, Payshap, on a layered architecture, where there's an orchestration layer, there's an access layer with APIs as mainly the basis of access. There's a service layer where there's microservices that you can chop and change and use and replace and so on. There's a value-added services area and so on and so on. So it's built on this modern architecture, and that is done to make it future-proof. So as much as Payshap is then the first slice of this, we will continue with more and more payments capabilities that we will roll out on the same layered platform or architecture, which very much speaks to a flexible payment system, isn't it? So, Payshap is in. What can happen next? I think that is the question on everybody's mind. I do think Payshap is going to, once it starts to take off, we will see a number of things happening very quickly. The one is that if you look at RTC is already mostly in that sub 3,000 transaction limit band. That's where all the Payshap transactions is currently taking place, or Payshap is limited to that at this moment in time. So I think that we will actually see a very small portion of transactions there. However, on EFT credits, the same. There's a big portion below. Another reality is there's a big portion of same-day bulk that can actually be replaced by Payshap. So a number of things I think can happen. Payshap is on its journey. There's still a lot to do. We're currently looking at product release 2, which is the rollout of a request to pay capability, which actually deals with that exceptions dilemma that we spoke about. Payshap, is it ticking the financial inclusion boxes? We believe yes. You know, so and I want to leave you with the thought that it's much more than just a new instant payment system. It is at the heart of what the government needs to or tries to achieve with financial inclusion. It's deepening financial inclusion. It's providing customers with alternative ways to pay. It allows for other participants. It's a mechanism for crisis situation like we had with COVID. It will continue to build a safe payment system. Last thought just, there's hard miles ahead. And that we know from research that SBV has conducted, and I don't want to steal their thunder. But what they've indicated to us, they've identified 5 segments that is either cash pro or digital pro. And the sad reality is there's a small portion of only 36% people in this country that interacts with financial services that are digital pro. A big portion that are not. But the saddest part, there are some of them that will never, because of how cash reliant they are at this point in time. If we don't do, as a collective, a lot to move that, we're going to get stuck in this kind of situation. With that, I thank you all.
Another round of applause, ladies and gentlemen. Brilliant. Thank you kindly.